Here with Kerr Nelson, CEO, Platinum Asset Management. Kerr, thanks for joining us. And what do you think are the key things that investors, particularly from an Australian perspective, should be thinking about in 2015, the year ahead?
I think the Aussie remains a soft currency, so we're still pushing for people to put more money abroad.
Yep.
And if we look at the opportunities, we think that there's really quite a big opportunity in Asia, and so that's China and India, and even Korea. And Japan will do okay probably because the market is benefiting from the weakening yen. So we think the big money should be in Asia, and we're not particularly negative on these high valuation Western markets. We think in
such as America.
Yes, they're towards the upper end of their valuation bands. But I think we'll still get good surprises from the financial system in Europe, strangely enough. So the banks there are still very attractive, we think. And in the States, we like some of the old tech, the Oracles and Ciscos that look like they're broken, but I think they're exactly the sort of duration plays the market is really looking for, and yet are priced at less than the market average. So we quite like them.
Yep. And in terms of potential surprises for 2015, if you were to pick any of the X factors, what are the things that keep you awake at night?
I think the oil price, if there was some interruption of supply, that would be a nasty shock. I don't think it's necessarily going to come from interest rates moving up very sharply. I don't think that's in prospect really. If wages start moving up in the States in real terms and accelerate, that would be quite a setback, I think, for corporate profitability, because that's where the cost squeeze would be, and they wouldn't be able to get their prices up. So, well, in many cases. So you'd get a bit of a squeeze on margins. In Europe, I think most of the bad news is out. I don't think we have any more concerns about the banks. We will have a lot of chatter about falling prices, so-called deflation. But in fact, the reverse side of that is real incomes do improve. And gradually, I think Europe will mend, and it has been. The current accounts of all those countries are in surplus. So it's not as if we're...
including Greece too, I think.
Greece and, places like Spain, you're seeing employment growth. You're seeing some house price appreciation, even though there's a big stock of unsold houses. And in Ireland, where they've had a huge cut in living standards, something like 15% cut in real incomes, the place is just flying. 6% growth or thereabouts. Property prices are up about 20%.
Yeah. So broadly, you're optimistic for 2015 by the sound of it, with a particular skew towards the Asian region.
Exactly.
On valuation. But it's more than valuation and also growth. But
it's growth. These are parts of the world which will grow twice the rate of the world in general, and in fact drag the growth of the world upwards. There is obviously a slowing taking place in China. The property market will remain quite sort of comatose. Interestingly, in the big cities, prices have not come down very much. And now that they've made concessions to people having, if you paid off your mortgage, you're treated as a first-time buyer. So you can buy a second property, and you only have to put down 30%. So that is tending to stabilize the market, which is not to say there's not plenty of oversupply in the smaller cities.
Yeah.
So property is a bit of a drag because it was a big growth area. Investment will probably slow, and savings will remain high because the social security net's still not in place. So it's a country that will have slowing growth, but the need for new jobs is diminishing too. In the 10 years to 2013, 160 million people entered the workforce. In the next 10 years, only 40 million will come into the workforce. Yeah. So the pressure on jobs and for concerns about employment has diminished.
Right, okay. And you're mainly playing China through the consumer side in any case, rather than investment, as in the building side.
A mix.
Oh, yeah? Right,
yeah,
okay.
I mean, we're not mad about property,
Yep.
but there are things like there's a truck company a truck engine company which also has a truck subsidiary, which is a very interesting story, which is Weichar Power, and it's less than 10 times earnings. It's got a fantastic growth rate. It's got a clean balance sheet and dominates the diesel engine market there. It nearly produces as many engines as Cummins, the great American company.
Yeah.
I like that. And then we're sort of looking at these drinks companies, as you say, these white spirit drinks companies, they're doing fine. There were concerns that luxury goods would just, fade in terms of consumption, but in fact they're holding up quite well. And turnaround could be huge, and you're buying these on 12, 14 times, which is, for a packaged goods company, making huge profits, over 20% return on capital is cheap. And then there are railways, there are all sorts of things we can buy. And this is being facilitated by the through trade. So where we put on an order in Hong Kong with a broker there, we actually have access to the A market, the A share market.
Which hasn't been possible.
It hasn't been possible. We had a quota, but this is now pretty much a almost infinite access. So we've started to see an opening up of their exchange controls. This is the mechanism they're starting to use. And every day the quota is set at about $2 billion US for money going in and about $1.8 billion coming out. And thus far it's not being fully used. So we can buy whatever we like pretty much at the moment.